Hey everyone, welcome to another episode of Crypto Corner with myself, OJ, crypto analyst and investor since 2016. Now, it's Monday, the beginning of a new week, but also it's almost the end of the year. So we are approaching this time now where we have to revise portfolios and see what is going to be reasonable to hold for next year. And this is why I'm going to do this three series now of episodes where I will be discussing the coins in my portfolio. Many of you are asking me if I'm holding this token, if I sold this token, if I'm buying this token and that token. This is what I'm going to do. Let's revise portfolios. And first I'm going to start with my hold portfolio. I have two portfolios. One is my kind of longer term portfolio, which I called hold portfolio, because these are tokens that I'm holding for several months, sometimes years, even though, having said that, I want to point out that I don't really do altcoins in the long term, meaning I don't like to be holding altcoins for several cycles. I like to offload my altcoins at the end of each cycle. And this is a lesson that I learned in my first cycle. So after my first bull run, which was 2016, 2017, I experienced the whole of 2018 and 2019 bear cycle, and I saw how many of the altcoins that I was holding, I wasn't holding too many, probably around 10 at the time, but some of them completely vanished. I mean, they just went into oblivion. They never recovered. And this is when I realized that altcoins should not be considered a long-term investment. So having said that, I have two types of portfolios. The hold portfolio is the one with tokens that I'm holding for the whole of this cycle up until the blow off top or whenever we see signs that the bull cycle has ended. And then I have a short-term portfolio, which is my trade portfolio, which has got a lot of meme coins and other degen tokens and things that I basically trade them every week. Or if I hold them for a couple of weeks, 3 weeks, something like that. And then I swing trade them. I offload that every time, we see a pump or we see approaching resistance, I offload. And then when we draw to support, when we start retesting, pulling back, retesting support, I buy them again. So this is what I'm doing with the short term. But let's look now at tokens that I'm accumulating or already having in my bags, holding for next year. And of course, these are not going to be the top 5 tokens. I'm not going to talk here about Ethereum or Solana or BNB. These are kind of obvious. Bitcoin, of course. But as Bitcoin is now touching a new all-time high, it actually just did that at $107,000 just a few hours ago. We're now pulling back a little bit. We see that we are 1% down, which is fine. Interestingly, Ethereum has still not touched its previous all-time high, which was at $4,867. I mean, we are close. We are above 4,000 already, but this is not a good performance from Ethereum. This is why I reduced my exposure to Ethereum during this cycle, and I sold at least more than half of my Ether, and I switched into Solana. But Solana is not also the safest token. Of course, we have the FTX people that have locked a huge amount of Solana. On top of my head, I can't really tell you how many coins, but there will be unlocks starting in March next year, and there will be monthly token unlocks. So there will be a supply shock coming into the market in Solana. So I'm not really sure whether I will be holding that much Solana next year. For the time being, for right now, I'm actually holding quite a lot of Solana. So my first biggest allocation is Bitcoin. Second is Ethereum still, even though I sold half of it. And my third biggest allocation is Solana. Then I have BNB. Now, moving out of the top 10, because the top 10, they're kind of obvious. By the way, I don't really have Cardano, and I don't really hold Tron, and I don't have any Avalanche as of right now. So from the top 10, Cardano and the XRP are absent from my portfolio. These are tokens that I was trading in the last bull cycle, and XRP actually I was trading 2 cycles ago. I'm not really interested in these tokens, even though retail came back strong lately, in the last month, and they bought a ton of these tokens. They pumped their prices so much At this point, I'm not really interested in XRP. I'm not interested in Cardano. I'm not interested in even Dogecoin, because yes, they can go up, but at this point, at these prices, if I'm going to be buying them now, I'm not really going to see a 5x or 10x return on them. So Solana, I'm seeing a 5x already because I jumped earlier. In fact, with Solana, I'm seeing a 10x or almost, but I'm not really seeing, I'm not expecting to see that with any of the other top 10 coins. So what are the tokens for next year that I feel have a potential to continue to go higher and higher? And again, this is my hold portfolio, meaning that these are tokens that I will be holding for at least a few months from now, up until I see that the trend is reversing. And if I see a trend reversal, I'm selling all of them, absolutely all of them, even Ethereum. Bitcoin is going to be the only coin that I will be holding through a bear cycle. Everything else I'm going to exit, just to make it clear. Now, one of the top coins in my portfolio that has been in my portfolio since last year already is Chainlink. I bought it at around $4, or was it $6? My average buy on Chainlink is probably around 14 because I was buying it in at different times and everything. And Chainlink has performed quite well for me. However, still not the best performer in my portfolio. I like Chainlink because it is sort of revolutionizing how smart contracts interact with the real world. And it has got a decentralized Oracle networks. It connects smart contracts to any external API, enabling secure off-chain computations, and the technology powers decentralized applications across industries like DeFi, insurance, and gaming. Their network consists of multiple decentralized oracles that fetch and deliver real-world data to smart contracts. And these oracles ensure the data accuracy by collectively verifying information, making Chainlink a reliable infrastructure for developers, which is something that I like about Chainlink. I mean, after Ethereum, I could argue that Chainlink has the biggest use case in terms of altcoins out there. Solana lately with the memes and everything, but still Chainlink actually has a lot of real world use cases rather than just digital use cases like what Solana is doing. It is the go-to solution for integrating real-world data into blockchain environments, supporting and everything from price feeds to DeFi to weather data to insurance policies. And it was the first actually data oracle. So it is widely used. It is still the most used data oracle. There are some other data oracles out there now that are trying to compete. But Chainlink is by far the one that everyone is using already. The token is up 140% in the past year, and the market cap reached $18.6 billion. So it is a very large cap. You can see it is in the top 11 by market cap ranking. So it is one of those tokens that have a lot of liquidity. And when I'm taking big positions, I want to have tokens with high liquidity. I need very liquid tokens so that I can exit in case I need to exit in a rush, exit quickly, in case I need to offload big amounts at the same time. I can do that with a token like Chainlink. I can do that with Ethereum. I can do it with Solana as well. That's why my whole portfolio has only large cap tokens. So today we're talking large cap. And the next one is Kaspa. Now, Kaspa is one of the worst performers in my portfolio. However, I did jump into it last year, not throughout this year. So even though this year it's done nothing, you can easily see that it's literally almost not moved at all. And in some time frames, it's actually on a negative. But I'm still believing that it will be doing very good next year, because this is one of those tokens that many people are really involved in it. Many people are invested. It's got a strong community. And it's one of the few tokens that still have not pumped. And I also like tokens that have not pumped yet, because there's no point buying Cardano at this point or XRP after it's already pumped hugely over the last couple of months. You're not really going to see another 5x from there. But with a token that has underperformed for pretty much the whole duration of this year, you have a chance of it outperforming next year. And the Kaspa is a decentralized open source layer 1 blockchain that utilizes the innovative Ghost DAG protocol, making it the fastest and most scalable solution for instant transaction confirmations. It allows multiple blocks to coexist and be processed in parallel. So not as in with most of the other blockchains where you have a block after block after block being mined every few seconds or every few minutes, depending on the blockchain. Here, blocks can be created simultaneously, which allows it to be ultra fast. Now, its key features include scalability, of course, and it's with a maximum supply of 28.7 billion coins. It's having a halving of the mining rewards every 4 years, just like Bitcoin does. And maybe this is why many people were comparing it to Bitcoin in the beginning. But it has developed a devoted community and it's got big plans for next year. Upgrades, new features. I feel that the guys are doing a lot of marketing right now for Kaspa. Once it starts pumping, I feel that it's going to be quite an epic pump. But at the same time, Kaspa has a lot of coders that have been waiting for over a year now to get into profit. So it's possible that this could hinder it from making a 10x from here. But 2, 3, 5x from here, I would say easily. The current market cap is only $4 billion. So in terms of large market cap, this is one of the smallest coins here in my bags. And it's only 40% up in the last year. So it's got a long way to go, believe me. Another one in my portfolio is FET. Now, this used to be the token of Fetch AI. This is an AI token. The AI narrative was really strong at the beginning of the year. Then we saw throughout the summer, nothing happened. All of the AI tokens went through a deep correction. Actually, the whole market went through a correction, but AI tokens still haven't really pumped since then. And Fetch was one of the top performing tokens at the beginning of the year. Now, they're building a decentralized machine learning platform that enables secure data sharing and transactions globally. It's open source technology, which is good. It allows users to connect to a network that harnesses AI capabilities for complex coordination tasks across various sectors, including finance, including public transport, energy management. And what is important to know about them is that we still call it Fetch, but in fact, they went through a merge, a rebranding and a merge. So the token should really be called ASI at this point, because this summer there was a merger with two other strong AI projects, SingularityNet and Ocean Protocol. So these were also very strong AI projects. They merged together because they actually want to fight with big tech, which is currently dominating the AI development. So this was the idea. Now, since that merger though, the performance of the token has not been that great. So I'm keeping a close eye on that. And another thing that I don't like is that it was supposed to be 3 projects that merged together to form Artificial Superintelligence Alliance. This is what it's called now. It's no longer Fetch AI and it's no longer Ocean Protocol or SingularityNet. It is altogether ASI, Artificial Superintelligence Alliance. But recently I saw that Kudos, which was another AI token, their blockchain is a leader in distributed AI computing. They're now also being assimilated into that alliance. So it seems to me like they're not quite done with what they want to achieve. And I feel that the market is also sensing that there is risk in this project, that it might not really succeed. And probably this is a reason why we are seeing that the performance is not as great ever since the merge. I mean, it pumped really high up until March. And since March and after the merge, it's kind of recovered to a certain point, but it's not really pumping the way we see other tokens pump. However, I'm holding it because I do believe that next year we're going to see a better performance, even though the performance was not that bad. I mean, 170% in the last year. Not bad at all. Still, I have tokens in my bag that are 300-400% up in the last year. So, much, much better than 107%. $4 billion market cap currently. Again, not a humongous market cap, which means it has a lot of room to grow. And speaking of AI tokens, another one, and this one I'm actually even more positive about, It is Bittensor. The token is called Tau. Bittensor is a decentralized peer-to-peer intelligence market, and it copies Bitcoin in a sense that it has 21 million tokens. But this is pretty much all of the comparison. And this is also why the price is much higher than you see on many other tokens, because of that limited supply. Tau is currently more than $500, and it went up to 700 just a week ago. This is when I was offloading some of my stash. I did a little bit of swing trades, and now I'm reaccumulating it for next year because I still feel that there is a long way to go for this token. I feel that more and more people are coming into this space now and coming into AA tokens, and Bittensor is one of those projects that many people are talking about, and I like tokens that many people are talking about. The token is up only 72% over the past year, but as the AI sector gets a resurgence, I expect it to do much, much better. And again, I'm really looking for tokens that have not pumped too hard so that they still have a lot more room to grow. I don't want a token that's pumped 700% in the last 3 months. That's not really what I'm buying. All right, moving on to the next one, and this is Pendle. Pendle Finance is a decentralized platform transforming crypto yield trading by tokenizing future yields and enabling its users to optimize and manage their earnings within the DeFi ecosystem. It's a project from South Korea and has quickly gained traction with its innovative solutions and active community. It allows users to engage in advanced strategies like fixed yield and liquidity provision without needing extensive knowledge of AMM mechanics. Now, I have to admit that if I am to be buying Pendle right now, to start accumulating Pendle right now, I'm not really sure about it because I feel that it's already gone quite high. I've had it since last year, and I've made 450% gains since my entry point because I entered last December. So it's good for me, and this is why it's still staying in my portfolio. Is it that good for right now? First of all, I would wait until we see a market correction because I feel that after Bitcoin printing a new all-time high, we are due a pullback. And a 10, 15, maybe 20% correction in Bitcoin is definitely going to send all of the altcoins much, much lower, meaning you can expect 30, 40, 50, even 60% corrections in some altcoins. This is when I would be interested in accumulating Pendle, if you're interested at all. Because as I said, if you bought Pendle earlier and you got it under $1, and it's now around $5-6, that's a very good profit. But if you're going to be buying it at around $5 or $6, would it go to 10? Possibly, but that's kind of 2x from here. It's not really that much. You can do better with some other tokens. However, if you manage to scoop it below $4 or $3, then you have a good chance of making at least 3-4x. Which is a decent, also, because Pendle is a popular token, you can actually work with higher amounts, which is not always the case. With many of the tokens, you can't really work with massive amounts. Pendle is on Binance, so Pendle is easy to trade in high volumes. Now, another one that I do believe is also quite already, pumped a lot is Sui. Sui is designed for decentralized asset management with lightning-fast operations. It uses the Move programming language, and it was founded by former Meta engineers. It's actually some of the team that was tasked with creating Libra, if you remember, the cryptocurrency of Facebook that never really happened. Some of the people involved in that project started Sui, and it's up 680% in the last year, with a current market cap of $11 billion. So already quite pumped, already a very large market cap. Does it have more room to grow? For sure. Maybe another 2-3x from here. But I don't expect a 5 or 10x on Sui. However, as I said, it is a very popular token, high liquidity, big trading volumes, easy to jump in and out with big volumes, and this is what I like. I've got a big stash of Sui, and I know that if I want to sell, I can sell big chunks easily. This is why it's in my portfolio. Now, we can't talk about Sui without mentioning SEI. SEI is the token, and this is kind of the little brother of Sui. It's another open source layer 1 project that is designed for fast and efficient trading of digital assets across gaming, NFTs, and decentralized finance. And it also supports high trading volumes seamlessly, which enables multiple transactions to occur simultaneously, as I mentioned. The architecture is particularly beneficial for high-frequency trading environments. And also similar to Sui, its founders come from Google and Goldman Sachs, tech giants like that. The token is up only 145% in the past year, which is not, anything crazy. And also it had a long downtrend throughout the summer. So most of these gains happened up until March. And then since then, we haven't really seen that much activity. Of course, it woke up here in the last couple of months as the market picked up. But I still feel that it's got a long way to go. It's currently 50%, still around 50% below its all-time high, which makes it even more appealing to me. The current market cap is below $3 billion, so it is one of the smaller cap coins here in my hold portfolio. All right, moving on to another token that not many people are talking about, and I like that because it is a token that right now is kind of flying under the radar, which means that once we see the hype happening, and it will happen for sure, it will be explosive as well. And this is INJ, the token of Injective, which is also a layer 1 blockchain. As you see, a lot of my big allocations go into layer 1s, because these are actually strong projects with stronger fundamentals. And if I'm going to be parking huge amounts of money, I'm looking for strong fundamentals. But in the next episodes where I'm talking about my other tokens, you will see that fundamentals don't always matter. They do matter for longer term hold, but fundamentals are not really important for short-term swings or anything like that. However, this is my hold portfolio. These are tokens that I'm holding for several months. So I'm looking for fundamentals, and Injective has strong fundamentals. It is in the DeFi sector, and it is used to create dApps in different sectors, not just DeFi, but derivative exchanges, lending protocols. It pays staking rewards too, so if you're holding INJ, you can actually get some staking rewards. I believe that in 2025, this token is going to have a much better performance than what it did over this year. And this year, it actually reached in March its all-time high of $52. It is currently 42% down since that price, which makes it appealing to me. And its market cap is below $3 billion. So yet again, another one of those tokens that are in very small market cap compared to some of my other long-term holdings. Toncoin is the next one. This is the token that was started by the developers of Telegram. It was going to be the token of Telegram. And then, of course, governments exercised pressure and everything. So, the developers moved away from the project, and they basically let the community develop it, which is what I like about it. It is quite decentralized, and its goal was to become the go-to payment method, enabling users to send crypto directly in Telegram chats with minimal fees. Although this is not yet quite happening, but I'm pretty sure that at some point it will be implemented, and then we can see a huge pump. If this happens next year, it's going to be explosive. But even without it, Toncoin is a very popular token. It's got a very devoted community. As I said, the community basically developed the token after the original developers backed away from it. So this is what I like about it. And this year, it's 170% up. And the market cap is $15 billion. So it is already quite a huge market cap. I don't expect 5 or 10x from here, but a 2 or 3x, not bad. Especially if you have a large holding position, 2 or 3x is good enough. HBAR is another one. Hedera Hashgraph, it's the name of the project, and it's a unique distributed ledger that is designed for secure, efficient, and scalable dApps. Now, unlike traditional blockchains, it uses a special consensus algorithm called Hashgraph, which enables fast and fair transactions with high throughput and low latency. This makes it ideal for industries like finance, healthcare, supply chain management, plus it's eco-friendly. It was launched back in 2017, so it's already considered a dino coin, and for the majority of this year, it didn't really move that much. But in the last few months, it did quite spectacular. I mean, it is already on pretty much every exchange and all of the retail exchanges as well. And probably this is why we saw a huge pump when retail came back into the space. So currently it's got a total supply of 50 billion tokens, and it's $14.5 billion market cap. It's 466% in the last month alone. So that means that at this point, it is not a good idea to be buying it because it's pumped quite a lot. I mean, more than 400% in 3 months, that's huge. So wait for, if you are going to be accumulating, definitely do not jump right now. Wait for a market correction. Wait for a bigger market correction where tokens are going to dump by 40% or something. Then you can consider jumping in. Okay, the next one is NEAR. Another token that not too many people talk about. It is again a token that's been through several cycles. It's not a newly launched token. It tackles common blockchain issues like slow transaction speed or low throughput by using proof of stake consensus mechanism, meaning it also pays staking rewards. And it is another blockchain that allows simultaneous transactions, because it has a sharding architecture that allows the blockchain to process transactions in parallel with each other rather than one after another. This makes it ultra fast again and quite secure, which is important. The NEAR token is used to pay transaction fees, and it is a governance token as well. So different use cases here. The token is up 186% in the past year. Not bad at all, but I still feel that it's got a long way to go in 2025. And this is why it's in my hold portfolio. Like the next one, which is Aave. Now, Aave, for the majority of the year, also didn't really move that much. It didn't really manage to perform as well as it did in the previous bull cycle, which is when I was actively trading it and accumulating it as well. This cycle, I wasn't really that much interested in Aave. And another reason why I wasn't really that interested in Aave is because it's based on Ethereum. And this cycle, let's face it, it was not about Ethereum-based tokens. This cycle was all about Solana-based tokens. Also Base made quite a splash. But Ethereum was leading the run in the previous cycle, in the previous 2 cycles, but in the previous cycle with DeFi and NFTs and everything, Ethereum was killing it. This cycle, not so much. So Aave, which originally was known as ETHLend, because it is a lending platform, it rebranded in 2018 perhaps. I think it was in 2018 when it transitioned from ETHLend into its current form, Aave. And very quickly during that cycle, it surpassed 1 billion in total value locked. That was back in 2020. So it was a very hot property, that token. And we were all trading it, and we all did really well with this token. This year, finally now, it managed to actually pump and see some nice gains. It's actually pumped quite a lot. It is 285% up in the last year. Most of that performance actually came in the last month. And mainly because, as I shared in my previous video, if you saw it, the Trump organization, his new crypto corporation that he started with his sons just a few weeks ago, actually invested $1 million in Aave. And this is why they put it on the radar of a lot of people who had never heard of Aave before that. So not only it is one of the most popular decentralized lending platform, and with a lot of users and a lot of utility for the token already, but on top of it, the Trump effect. So definitely it put that token back on my radar. I wasn't interested up until a few weeks ago. And with the recent pumps and everything, I'm interested again. But I'm waiting for a market correction. I'm not holding it yet, and I will be waiting before I jump in. Now, a token that I'm already holding and that many people are super hyped about is Hype. Aptly named, this is actually the token of a brand new decentralized exchange called Hyperliquid, which is a high-performance Layer 1 blockchain designed to support an open, fully on-chain financial ecosystem. It's utilizing a custom consensus algorithm known as Hype BFT, and it achieves block latency of under 1 second. It can handle up to 100,000 orders per second, which is remarkable. And this is why everyone is so hyped about the exchange. They also had a massive airdrop for the early adopters of the exchange. This also helped. As you know, airdrops always help. They're building a community. They're kind of keeping the community faithful and strong and excited and hyped and everything. And this is what we want from a token if it's going to be performing well. So it's got all of the features that are needed here, all of the characteristics that are needed for this token to perform even better over the next few months. It's already 74,000% up since its launch, but fear not, because we've seen with many tokens that they can go much, much higher than that. And the token actually pumped 116% in the last week alone. So again, definitely not something you should be jumping in at this point. If you already have some, hold them. I mean, at $28, I still feel that this token can go higher, but I wouldn't be buying it above $20 at all. And then we get to the last token on my list for today, a token that many people don't even know about. It's called OM. It is the token of Mantra DAO, which is a RWA infrastructure. I've been talking about RWAs for quite some time now. This cycle, especially at the beginning of the year, was really strong for RWAs. This is real world assets. So these are projects that are basically operating on blockchains, but they are incorporating real world assets one way or another. This is a multi-asset platform that bridges traditional finance with DeFi, decentralized finance, for both institutional and retail investors. Recently, Mantra secured an $11 million in funding from notable investors. It is about 16,000% up since its launch, reaching a total market cap of $3.5 billion. But this is, it's still a very small cap for what it does and for the sector that it is based on. So I personally like to hold tokens in about 4 to 5 sectors at most. And for kind of my hold portfolio for the longer term, I'm holding RWAs, I'm holding AI, I'm holding DeFi, I'm holding layer ones. Now, for my short term, I'm holding tokens that are mostly memes, degen type of tokens, gaming tokens. These are the kind of things that I'm holding for the short term. And this is what I will be discussing in the next episode. So make sure to subscribe if you haven't done that yet. Follow this channel. I'm coming to you with more great alpha every week. Now, a reminder, just like I emphasized the importance of using cold wallets, the OneKey Pro stands out as my top recommendation for safeguarding your digital assets. This model is equipped with not 1 but 4 security chips with the highest industry standards. But what I love most about the OneKey Pro is that it has air-gapped signing capabilities, so you can securely confirm transactions without ever connecting to the internet. This is done by scanning QR codes, and there is a camera to facilitate this. There is also Bluetooth connectivity should you wish to use that. It makes it unique because it is the first device of its kind to offer both Bluetooth connectivity and air-gapped mode. I prefer air-gapped most of the time, but if I'm in a rush, I would use the Bluetooth option. I have a choice, which is great. And there's other things that make it worth your money, like the biometric authentication, which is just adding an extra layer of security. Plus, it supports thousands of cryptocurrencies. The list is too long to go through it here. And it's also the first cold wallet with wireless charging capability. These are all unique features that no other device currently offers. It's super lightweight and compact, fitting easily in my pocket or bag, ideal for my travels throughout the year. And whether you're at home or on the move, this wallet seamlessly integrates with both desktop and mobile phones. And the best part, you get 10% discount with my link, the most of any other YouTuber out there. So use the link, it's in the description below, or you can scan this QR code to get the discount. And this is for all of the OneKey products, not just for this wallet. I also love the touch model and even the older one, the OneKey Classic. They're very easy to use. The OneKey Classic is the most simple one, but also it is the thinnest and the lightest of all of them. So it is perfect for on the go. It doesn't have a full color display and it's not that easy to navigate with just 4 buttons. But for simple stuff and for long-term holdings where you don't really have to make too many transactions too often, it is perfect. So there's plenty of choice. You can download my free ebook where I break down these and many other devices currently on the market, so you can compare and choose the right one for you. Remember, always own your private keys and keep your crypto safe. And while you're here, just pick another one of my videos and I'll see you there.